Good morning, everyone, and welcome to the Money Control live stream. You're watching Markets with Santo and CJ. Well, it was a big weekend for the multiplex industry as the Brahmastra movie released. And yes, I mean, if you look at it, Santo, in terms of collection, it has been one of the best box office collection we have seen for the weekend in recent times.
For a reason which I'll get into later.
I mean, almost 105 crores worth of, collections in the first weekend for the movie, which is clearly a good sign. You saw a lot of footfalls also, come back. But if you talk about the movie alone, clearly the reviews have been quite mixed. If you talk to the older audience, probably beyond 40, they have given a thumbs down to the movie, it seems. And among the younger audience, it's been a mixed bag, but the opinion seems to be more benign compared to what the older audience thought, and that is the review coming in from Edelweiss Securities. Overall, of course, let's not forget that Brahmastra was almost like a do or die, moment for the multiplex industry, Santo, because we have seen over the summer period, not one Hindi movie could, live up to the expectations in that sense or bring back crowds, whereas the entire debate about OTT killing the moviegoer has again come back on the table, and a lot of people expected that Brahmastra would be the turning point for the Hindi film industry, and so far, hopefully the signs are good, but at least people are not that confident, it seems.
Well, CJ, everyone, at least the movie industry, was hoping that Brahmastra would turn out to be the Brahmastra for the multiplex industry, but looking at the reviews of Brahmastra, that necessarily doesn't seem to be the case, and that point about very high collections in the initial in the first 2 days, I think that also has to do a lot with the very high ticket prices, which is what many people are saying. So if you were to strip that out, then probably it's done decent business, not as high as it should have been. I've heard that the ticket prices were as high as 600 in some cases.
Yeah.
600.
I think that was also because advance booking for Brahmastra was probably the highest that we have seen in recent years. So I think probably that's why maybe multiplexes owners raised the prices.
Yeah, this works like a double-edged sword. When there is huge hype and the moment the movie fails to deliver to what was expected of it, it means that then future audience drop becomes very that much less, and clearly in this case the kind of advance booking, as you said, the highest ever, meant that people just want an absolute killer out there, which is not what seems to be the case. Also, the outlook for PVR in general has changed quite a bit over the last few days, and you've had a series of flops, and if Brahmastra was some kind of a outright hit, probably then you could have seen the sentiment change, but that not being the case, I think there is a case that probably the kind of underperformance that you have seen over the last few days could maybe continue for some more time, CJ.
I think Santo, PVR will probably not give in so soon. They would argue that, Brahmastra at least has been able to bring back audiences to the theater screens, which was actually not the case entirety of July and August, and they will be counting on that to improve their, second quarter earnings going ahead. Apart from that, of course, given the fact that audiences at least come back, the upcoming movie pipeline is also quite decent. If you look at some of the movies that are lined up, you have Vikram Vedha, you have Ram Setu, Akshay Kumar sir, Ram Setu, and Katrina Kaif sir, Phone Booth. So clearly, there is a good lineup for at least for the month of October. And of course, October is the festive month, right? You tend to see a higher footfall during that point of time. Yes, there is no Khan movie this time around, probably around Diwali, but people will be banking on the other movies to bring that footfall. And maybe in the Q3, you would see a decent sequential rise as far as ad sales and, F&B, which is the major chunk of revenues for them, do quite better. Apart from that, Edelweiss was of the view that, Santo, that the Friday sell-off that we saw, of course, when the initial reviews came out from Brahmastra and some of the industry experts who had reviewed the movie, they were not really quite happy about, the way the movie was made. Stocks fell almost 5 to 6%, both PVR and Inox. Edelweiss believes that from a longer term perspective, this sort of a sell-off could actually turn out to be an opportunity. And I think I would probably be on their corner at this point of time.
Well, I take your point about this upcoming festive season. That's also typically a time when multiplexes tend to do good business. But as to the strong pipeline, again, it ultimately depends on how the movie is received by the audience. Because if you look at the case of Lal Singh Chadda, Dhadak, even that couple of other Akshay Kumar movies, the expectations were pretty high.
Shamshera. Santo, there was one difference between Brahmastra and all the other movies, and this is what Edelweiss has also pointed out, that Brahmastra spent almost a large chunk of their budget also on marketing, which the other movies did not do, because they had to spend almost 80% of their fees on just the actors itself. So there was not enough marketing budget. But I think a lot of movies going forward will realize that marketing would have to be a very big part of their movie production, post-production activity, and I think that itself could bring a lot of footfalls, at least initially, and then of course you need the good content to hold on. And also, let's not forget, there are a lot of South Indian movies, big budget South Indian movies lined up for releases across the country, so you would be counting, multiplexes will be counting on at least them to be holding audiences
and
to
even
the screen.
otherwise, CJ, it is hard to value PVR purely on a P basis. That's never been the case. It's always been like the movies. This has also been a story which is sold to investors.
I mean, it's an India consumer story, and of course that's why that's the narrative. That story will always command a premium, Santo. And I think going ahead, overall, if you look at it from a 5 to 10 year perspective, especially with the merger happening with Inox Leisure, I think there is a lot to look forward to from an investor point of view who's looking for the long term. Well, that's it. Let's quickly now look at the trade setup for today, and it's a very muted setup for Dalal Street this morning. If you look at the SGX Nifty, it's indicating only a 30 to 35 point up move on the Nifty.
Only a 30 to 35. I mean, every day you want the Nifty to open something like 100 points higher.
Of course, Santo, 100 point is not even 0.5% at this point of time. It's just barely about 0.5%.
Market just can't, there's a saying in the markets that trees don't grow to heaven and roots don't grow to hell.
Well,
so,
as great as the saying is, Santo, look at the context. The S&P 500 and Nasdaq were higher by almost 1.5 to 2% on Friday's close. By that standard, we are basically very, very moderate opening.
We could go on and on, but well.
Anyway, apart from that, of course, I think the concerning point will be the bit of a revival that we are seeing in crude oil prices. Crude oil prices rose almost 3.5% on Friday. And, US Treasury Secretary Janet Yellen gave a very dire warning that she expects oil prices or energy prices to soar through the roof in the coming winter. And of course, that is a lot down to what is happening in Europe and what is happening with Russia at this point of time. But, Santo, this crude oil thing is very interesting because, a government official, over the weekend who was talking about it, he said that in the West, oil prices are higher by, or pump prices are at least higher by almost 20 to 25%, right, from last year. In India, it's actually down by 2%. And probably that also goes to show why there is so much optimism for the Indian macroeconomy compared to what is happening in Europe and probably in the US.
Well, the official never said that prices here have not been revised from the time they fell from $115 or $120 to about $92, right? You just take it very high, keep it there for some time and then say that prices here have not gone up. Well, that apart, CJ, it does look like the bullish trend could sustain for some more time. The mood is quite upbeat on the street. You've got strong FI inflows coming in, and no major negative news at some point at this point in time. Although you are seeing some niggling worries here and there. For instance, RBI having to spend close to $13 billion from its reserves in August.
We are almost at 2 years low.
Near 2 years, the reserves are down to almost, they are good, but they are still close to a near 2 year low at this point in time. So there are some worries on the margin, but nothing major at this point, at least to upset the overall momentum. So I think my bet is that, CJ, probably you could see the market take out 18,000 shortly.
Well, thank you, Santo. We are glad for that. That said, let's quickly look at some of the stocks that will be on radar today. Starting off with an IT name, Santo.
Yes, eClerx Services. Now, the stock has rallied close to about 30% in less than 3 months and has been among the better performers in the IT space, where the overall mood still remains a bit cautious. Last week, again, you had seen some kind of a sell-off. So this stock has managed to hold ground. Now, the company management is pretty upbeat. It had recently met some analysts, and according to the management, the deal pipeline, the momentum was quite good in first quarter, and that's likely to continue for the rest of the year. Also, the management has guided for a 28 to 32% adjusted EBITDA margin for this year,
quite strong, actually.
which is quite strong, and they're confident of meeting that figure. And according to MK, which is bullish on the stock with a price target, with a buy rating and a price target of 2,400 rupees. Demand tailwind, steady cash generation and prudent capital allocation beside reasonable valuations are some of the factors that are working for eClerx at this point in time.
Well, Santo, I think if you look at the mid-cap IT space, clearly there has been a lot of interest from investors and HNIs, especially mid and small-cap IT for the past 2-3 months. I think that is also reflecting in eClerx. But if of course, fundamentally, there are a lot of good things to talk about with respect to eClerx. But I would just focus on the technical part, and I think there the stock looks a little vulnerable to bouts of profit booking going ahead, especially a lot of short-term traders who would not be so confident that this rally could continue for too long given the macroeconomic scenario. they would want to quickly take profits as soon as possible. And I think that is something that may limit the upside going ahead for the stock. Apart from that, of course, it's facing a very critical resistance at the 200-day moving average of about 2,267 rupees. And I think that will be very crucial. If we cross that, then of course MK's price target then comes into play. But if we do not, then that might become a little difficult, and we may see some bit of profit booking around that level. Well, the first stock on my radar today is Balaji Amines from the chemical space. Now, the chemical space has been, buzzing recently with respect to what is happening in Europe in terms of the energy crisis. We have already had, a very dire outlook coming in from BASF, as one of the biggest chemical manufacturers out there. They have indicated that they will have to cut back on a lot of, production on a lot of chemicals, specialty chemicals in general, and analysts here believe that that could be a very, very good opportunity as far as India is concerned. Now, within that, of course, Balaji Amines stands out because BASF is in the production of a lot of amine chemicals and solution, and in India, Balaji Amines is the only producer of many of the chemicals that India imports from Europe. So in that sense, this could be a good earnings kicker as far as Balaji Amines is concerned, at least for the second, third and the fourth quarter going ahead. Overall, I think analysts are of the view that the street has been underappreciating the capex that the company has done. Remember, it has increased capacity at its DMF facility. It is also increasing capacity utilization. Many of the other facilities which are only working at 40 to 40% utilization. So going ahead, the company is very bullish that they can score at least 10 to 15% volume growth on a consistent basis in the coming years. And therefore, I think, Santo, the correction that we had seen in Balaji Amines earlier this year could be a very good opportunity for the long-term investors out there.
Well, hard to disagree with you, CJ, at this point. The stock is off sharply from its highs, which it had seen last October. But since then, since June, once again, there's renewed buying interest in the stock. The first quarter numbers have been a bit of a disappointment. There's been a fall in a noticeable dip in its top line. However, the company has managed to improve its margin. So that is something probably what the market is positive about. And besides that, if you look at any other parameter, the company has managed to improve its cash generation. Besides that, it has brought down its borrowings sharply over the last couple of years. Last 3 years, both top line, bottom line growth, besides stock performance also, everything.
And apart, this is despite doing major capex at the same time.
Exactly. So at this point, it's very hard to make a counter case, although market seems to be a little slow in appreciating. I just can't figure that out. It's just that the stock was at a high in October, and since then it's still quite some way off. Although at this point in time, I would say that the mood is slowly improving for the stock. And next stock on my watch list is Ipca. The stock has been under pressure lately after its first quarter earnings, but Edelweiss had a meeting with the company management, and according to Edelweiss, the company is looking to strengthen its India business through sales force addition of close to about 1,500 people over the next 18 months. Now, the company's India business has been the bright spot. It's been doing consistently well there. UK has been a bit of a laggard, both in terms of generics as well as API. But that is expected to improve from FY24. They've got about 6 approvals from UK, and the effects of those should start flowing in over the next couple of years. And Ipca has is positive on that, on the stock, saying that its strong India research and development engine and industry leading growth rate is clearly being ignored by the street at this point in time.
I think, Santo, that's more of a hope story as far as Ipca is concerned, because clearly the revenue from the export side of the business has always been very crucial, even though the domestic business has been doing well. But even at home, the anti-malarial segment is something that would be of concern, almost 60% degrowth in the previous quarter. So that is something that investors will want to keep an eye out on. Before I go on, about Ipca, Santo, let's just quickly take a look at the market. And it has been a decent uptick, almost a 50-point up move on the Nifty at this point of time. And clearly, it is a bank Nifty that is leading the gainers at this point of time. Santo, again, higher by 0.4%.
75-point jump on the Nifty. That should make you happy, CJ.
It is very
Nifty
impressive
bank up
jump.
0.4%, and NSE advance to decline ratio quite strong at this point in time. 1800 stocks up and 300 stocks down. Nifty mid cap is up close to about 0.6%. So, well, you got the start you were hoping for.
And IT, Santo, IT is doing quite well at this point of time. Higher by almost, Nifty IT index is higher by about 0.8%, 0.9%. So in fact, it's the IT that is leading the market, not the bank nifty. The bank nifty is actually at this point of time a bit of a laggard. But if you look at the small cap and the mid cap space, and the charts will come up in front of your screen, I think if you look at that, clearly the nifty small cap remains the big outlier, Santo, the outrank performer. Now the rally is almost closer to 30% from the mid-June lows, which is, I mean, spectacular if you look at it, that almost 6 months ago, nobody wanted to touch small cap names because they thought that the rally that had started in March 2022 was over once and for all. So clearly, a very strong comeback. Well, coming back to Ipca, Santo, the point I was trying to make about the anti-malarial segment is that it's a very big chunk of the domestic revenue. And the decline in volumes there and the sales there is probably something of concern, especially if you look at it from a sequential point of view. I think that is something to be, keeping an eye out on. Apart from that, of course, the businesses in Europe, Sri Lanka, even Russia have been suffering, although management has indicating they expect those businesses will grow 13 to 15%, but that will all depend on how the geopolitical issues around these countries or these markets evolve going ahead. And apart from that, yes, they are investing in Salesforce, but investing in Salesforce also means higher cost. And this on top of the fact that their fixed costs anyway have been rising according to choice broking. And therefore, I think the pressure on margin is unlikely to abate in the near term going ahead. Well, Santo, the last stock today?
Indian Energy Exchange. Now, again, the company had an analyst meet and sounded pretty upbeat, mainly that the company is hopeful about volume growth picking up, especially from the second half onwards. And it has said that it is not really concerned about competition all that much, and it sees one of the major drivers for volume would be the fact that a lot of action is now shifting from the term ahead market to the day ahead market, yeah, which is a kind of a 24-hour settlement. So that is something which the company management is very hopeful about. But according to IFL, at this point, while the company is in a fairly strong position, still the valuations are pretty expensive at close to about 24 times, roughly about 37 times, FY24 earnings. So that is pretty expensive, and that's why the brokerage has an add rating on the stock.
Well, Santo, it's no secret that I like the stock given how it has performed over the past 3 to 4 years, and of course the overall long-term growth that remains for the Indian power exchange market going ahead. If you look at the stock technically at this point of time, yes, it is looking quite weak. The past 5 to 6 months have not really been kind to Indian Energy Exchange after the rally that it has seen in 2021. But recently there are signs of some bit of pullback. If you look at the daily RSI, it has come back from about 29 odd level, which was oversold territory, to about 48, 45 level at this point of time. And technical analysts will hope probably it reaches around the 60 point, where then you could see a strong buying coming into the stock from a short-term point of view. But overall, as I said, the long-term story remains intact. The recent order, regulatory order that came in the favor of the company, with the government now, allowing long-term contracts to be allowed on the exchanges, that is something that is expected to be a big kicker for volumes and earnings going ahead. And as the management rightly said, the day-ahead market is a big potential for IEX, and that is something that probably analysts and investors would be working out to see how much it can contribute to IEX's growth.
Well, with that, it's a wrap on this edition of Markets with CJ and Santo. Thanks for watching, and please do share your feedback in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live at 3 p.m. Till then, have a great trading day.